Hi traders, there were no major surprises last week, allowing the markets to trade more technically based on breaks of levels and geopolitical news flow. The interest rate decisions from the RBNZ was as expected, and the important inflation and GDP releases from the US were in line with forecasts. July began with markets in a risk-on mood as a truce between US and China at the G20 summit. Equities opened this week with an optimistic view as Monday's session followed the relatively positive outcome of the much anticipated meeting between US President Trump and his counterpart, Chinese counterpart, Xi Jinping at the G20. The good feelings have begun to fade fairly quickly. The clear winner from the talks was the chip sector following Trump's announcement that US technology firms would be able to continue sales to Chinese telecommunications firm Huawei Technologies. The semiconductor index surged by nearly 5% in early trading, and the tech-heavy Nasdaq Composite Index rose by over 1.6%. By the end of the session, questions about the trade outlook and the high valuation of chip stocks sank in. Stock prices gains were enough to push the S&P 500 to an all-time closing high. The US dollar rallied to its best level, adding 0.5% against a basket of peers, as no further tariffs in the short term will be imposed on Chinese imports. The dollar was aided by better than expected manufacturing PMI figures also. Even with the surprise from macro data, Fed fund futures still price a very high chance of a 25 basis point cut in July and another rate cut in the remainder of the year. Overnight, the Reserve Bank of Australia had cut their interest rates by another 25 basis points, bringing the cash rate to a record low of 1%. The RBA are looking to lift inflation towards their target as well as reduce unemployment. The rate cut was expected and it was 80% priced in, so not much of a movement in regards to the Aussie dollar. Cryptocurrencies continued lower as correction sets across the board. Bitcoin retreated from its peak and now below the $10,000 handle, a sign of buyer exhaustion from the recent rally as prices reached a 17-month high of $13,880. It is worth noting investors may view this as an opportunity to buy the dip, as there are a number of bullish drivers taking place over the coming months. This week's focus will be the news flow from the OPEC Plus meeting, as recent rhetoric has been to extend production cuts until March 2020, and the US non-farm employment figures on Friday. Have a good trading week. Thank you.